we start with, we are done up to trading and you have done your balance sheet and profit loss account also. So just formally to understand what is a profit loss account. Basically, after you have calculated your gross profit, okay, that means how much money the company is making on selling its product or services or by manufacturing its goods. So we always calculate the gross profit and sometimes we also calculate the gross profit margin. Okay, so we'll do that also later on. So then after you have calculated the gross profit of the company, then you move on to calculate the net profit of the company. How much profit the company has made. Okay, ultimately, that is called the bottom line. And net profit belongs to the shareholders or to the owners. So it will be added to the owner's equity or the owner's capital. Okay, and if some dividends are paid or some drawings are made by the owners, so that is reduced from the capital. Okay, because they have taken out the money. Yeah. Yeah. Or good, I mean, I'm in finance. So it is never called bottom flow. Maybe I'm not aware of that at the moment because I have been, associated with so many companies. We have been never called a bottom flow, but we call it a floor and a cap in derivatives. That's a different subject altogether. Okay. So profit loss account. So profit loss account starts with gross profit on the credit side. If the company has made a profit, then it will appear on the credit side. But if the company has made a loss, it will come to the debit side. Okay, so we'll do a question where it will happen. If there is a gross loss, it will be written on the debit side. Fine. Agar profit है company को, it will go on the credit side. Agar loss है, it will be sitting on the debit side. Okay, so we'll do a question so that you can follow it. Then after all those expenses and losses which have not been entered in the trading account will be written on the debit side of the profit loss account. So all other expenses, apart from your wages or carriage inwards or any expenses a company has done which are direct in nature, will be going to the trading account. But all the expenses which are indirect in nature, like for example, your general expenses, your salaries which you are paid to people, okay, the administrative expenses, the depreciation on the equipments which you have purchased, you are going to write them off over the years, okay, and then your selling and distribution expenses, you are, making some advertisements in the paper to sell your products or services, or you are doing some outdoor advertisements, putting billboards and anything, or advertising in the newspapers or TV. All this will be coming on your profit loss account. And similarly, the distribution expenses. For example, you are paying some commission, or you have some, people who are handling the sales, okay, and you are giving them some commission. So there are some people who are called feet on street who go and sell your products. They are your employees. So you pay commission to them, or sometimes you will pay commission to your channel partners, okay, your distributors. So that will also come on in the profit loss account. And also, like suppose you are paying any rent for the office, so that will also come on the profit loss account, okay, or any bank charges or any finance cost, interest, okay, paid on loan. So that will all go to your profit loss account. Fine. So yeah, you wanted to say something? No, no. Commission is basically, it's a word, definitely it is, can be associated with what we are saying. But commission is, generally paid, when you're selling your products, okay? And you have some distributors, you pay a commission. When I was working in Vodafone or Reliance, so we had, a lot of people whom we are selling our SIM cards. We are giving them the SIM cards and they were, selling it to the customers. So commission, say 10% on the price which we are charging from the customer. Okay, so that is the commission which is paid to you. When we use a middleman, yeah, we have to give him commission. That payment is commission actually. Expense. Sometimes we can pay, sometimes we can receive also commission. Right? So it's an expense. So income in gains other than sales will be written on the credit side. So any income, fine. So after you have made your gross profit, that is whatever your profit you have made on your sales. So apart from that, you may have some other income. For example, commission received, I said. One can be, you have some place, extra space in your office, and you're rented out to someone. So you're paying some rent. So that will be your other income. That means income which is not coming from your operations. That is from your business what you're doing. But it is coming because you have put some money in some form of investment also. Like you have some surplus money and you have put in a fixed deposit and you are earning an interest. So that interest will also be on your credit status also. And any income, any gain, like you sold something, you sold a machine, which you bought it for a lakh, but you sold it for say 1,20,000, so there's a gain. Or if you sold some land which you had in a business and you made some profit, so all that will be coming to your profit loss account on the credit side. Similarly, all the losses accruing to a company or a firm or a sole proprietor, which is on account of by sale of investments, you bought some shares and sold it at a loss, so that loss will be coming on the debit side. Okay. So let's understand first the debit side. Okay. Can you read Ariman?
Yes.
Ariman? I am pronouncing your name correctly? Ariman. Okay. Ariman, yeah.
Profit and loss account debit side. Salaries paid to the people working in the general office.
Okay. So that means all the salaries which you are paying to the people who are working in your general office. Okay. So that will go to your profit loss account. Fine. It's an indirect expense. Then
Then rates for the office premises.
so that means if you are, taken as something on rent, the office, okay, either you can purchase that, okay, it will become your asset. If you have not purchased it, but you have taken it on a rent, then you pay a rent, okay, and that will go to your profit loss account. So I remember, one day I was working in a company called Idea. That time it was called Idea Cellular. Now it's become Idea Vodafone. So we were having a meeting, a large meeting where we used to call it a leadership meeting, where about all the people, all the general managers, all the heads of the department and the company CEO, vice president, even sometimes the directors, they would be also there. So it used to be a 3-day meeting, and at the end of the meeting, my CEO, who was just sitting right in the front, he looked at the back, and and he looked at me. I was sitting at the last, and just called me. So I was, little bit frightened, scared. Kya ho gaya? Why he's calling me? So maybe I thought something that I have not talked to him during the meeting for 3 days. So he's unhappy, and I was not sitting with him, and we were having some group. So I avoided the CEO's table. So I was having a lot of thoughts. So by the time I reached to his place, then he said that we are making we had an office in Delhi. I was in Delhi that time. So he said that we need an office for about 60 to 70,000 square feet office, big building with a lot of floors, and we want it on rent, and we want our all our Delhi, Haryana, and UP, some part of UP West. All these people will be sitting in one office. So far our office was in Sonipat for Haryana, and for UP it was in Noida. Not in Noida, but it was somewhere, I think, in UP itself. So he says, we want one office. So you please, look for some place, either in Gurgaon or Noida. It should be around 70,000, 60,000 square feet area, huge area, okay. And if we go by the rental, that time, suppose we take 100 rupees as per square feet as rental, so it will come to about 6 to 7 lakhs of rent per month. So he says that, finalize some places and see, I mean, go to Gurgaon, Noida, or any other place. But of course, he says our choice is Gurgaon. So find out, one place there. So, and in fact, after the meeting, I was going on a little long leave. It was around Christmas to New Year. So I cancelled my leave. I never told my boss that I was applied for a leave. So I thought, okay, I'll just cut short my leave. And then, for 3 days, next 3 days, I was, going around whole of Gurgaon and all of the places, and even in Noida. So we finalized a place, which was, I came to Gurgaon also, but we finalized a place in Noida, where Noida, the rates were, around 25 or 30 rupees per square feet, whereas Gurgaon, it was around 70 rupees per square feet. But Gurgaon, most of the offices were coming to Gurgaon. So Noida was a place where, very few people were moving that time. So we found a very good building there, and we took our office, and it was fully furnished. We furnished it ourselves. So I was involved in, getting that whole office being made for our 3 circles. We used to call them circles, okay, telecom. So Delhi Circle, UP West Circle, and Haryana Circle, we just got a place where we could operate from there. We will have all our offices, marketing, finance, network, engineering, all offices were at one place. So it's a huge building, and it was well suited for us in Noida because many people were coming from UP side, and from Delhi also it is approachable. But anybody who's coming from UP to Gurgaon, it's a long distance. So it was felt that despite, I mean, of course, the rate was also a big factor, but properties in Noida were available at almost at one third of the rate of what available in Gurgaon. But it was a beautiful building, so we got it on a rent. So the rent which we are paying was going to our profit loss account because that was an expense. Instead of buying, we purchased, took it on a rent. Okay. Then we have lighting in the office. So we have have to use electricity for running our air conditioners, for our lights, and also we get a monthly bill from the electricity board. So that expense will go to the profit loss account. Okay. Then printing and stationery. So a lot of printing and stationery is being used when you are working in a company. So this is again an expense which is indirect in nature and goes to profit loss account.
And I remember one of the hotels, they installed motion lights and motion lights and fans
Yeah,
inside.
yeah, yeah,
So basically, the moment you go into the washroom, the light in the washroom will have on, switch on,
yeah,
and
yeah,
everything.
yeah,
That saved a
yeah.
lot of electricity in
Absolutely.
the first place.
See, when we were finalizing that office and later on we furnished it, so we had to put a air conditioning, okay, for the whole building. It's a huge building with having 4 floors, and that time the new technology had come where the air conditioning will automatically get switched off and switched on. Yeah, based on how many people are there in the room. Suppose in the auditorium there are 100 people, then the AC will be at a full speed, so that it can cool this thing. When there are only 5 people sitting, the air conditioning, the temperatures will, rise and it will consume less of power. So those things that you're saying, so we were also doing that to
And
save
smart technology can also help to decrease the
your
energy,
cost.
the losses also.
Yeah, yeah, absolutely. So postage, telegram, and telephone expenses. So you have to send, a lot of courier expenses are there nowadays. Okay. So all these telephone expenses, they are, all you're going into your profit loss account as an expense. Okay. So then we have the legal expenses. Company has to pay some legal expenses for some of the court cases which are going. Okay. And some cases with the tax authorities or GST authorities nowadays. Earlier we used to have excise, income tax, sales tax, but now everything has become one. Customs. So you had a lot of litigations happening. So, in the company, I was looking after all the legal cases. They would all come under me. And we used to have a legal team also under me. So we used to have lawyers. We used to always engage, outside firms for handling our cases, whether they were excise or other litigations, or now GST or income tax, whatever. So audit fee. So all the accounts needs to be audited, particularly when you're in a company. So it is mandatory for the companies to get their accounts audited. So audit fee is basically is a is
What
an
is audit
expense.
in the first place?
Huh?
So what is audit?
What is audit?
Yes, sir. You have to define the
Huh.
audit and
Yeah.
what is audit.
Actually, what happens? Let's take an example of a company. Okay. Now, company has what? The shareholders. Okay. And company has the directors. Basically, they are agents. The shareholders are what? The directors. Okay. And then there are others. Now, shareholders are all, people who have invested money. So they don't know what's happening with the company, whether the company is running in proper manner or not. All the, all companies, whether complying, all the legal compliance has been done by them or not. Companies paying the income tax properly. Companies paying the goods and services tax in time. Companies, doing some, it's not doing some illegal business, or there is not any kind of fraud, or moreover, there have been a complete internal control systems put in place, so that all the expenses the company is doing, they have been properly approved by the authorities which have been set by the board of directors. There is a policy which is called the delegation of power. So the company is following and strictly, doing the business in the manner, and whatever company profits they are showing, they are reflecting true and fair picture of what company has done. It's not that they are manipulating or fudging the accounts. So, the shareholders want that the accounts should be independently audited by a company, a CA firm, okay, normally. So, auditor would come and audit the accounts and give a report to the shareholders that according to his assessment, whatever has seen and gone into the details of the companies has done and followed all the norms, all the accounting standards they have followed. They have complied with all the legal laws of India or abroad, and whatever applicable to them. So he gives a comfort statement to the shareholders, telling that the profit which has been shown in the company's profit loss account is accurate. Okay, it is true and fair reflection of company's business. Similarly, the balance sheet of the company, which gives the assets and the liabilities, these assets they exist. The liabilities are real obligations of the company which they have to pay. Okay, and he also says that company has verified the assets, and he has also gone and checked that, and company is maintaining proper records of whatever assets they have bought. Okay, and whatever assets which are reflected in the balance sheet, they actually they are there, they exist. Okay, so he has to make some assertions, okay, in the audit report, which brings which makes the shareholders comfortable that okay, the company is doing their business fine. If the shareholders don't, if the auditors don't give that report properly, okay, and if the company has done some kind of a fraud or something, which comes to a notice of the chartered accountant who is doing the audit, but he doesn't get that, then he's liable to get his license cancelled, and he will be debarred from doing any further audit. And again, the auditors are subject to the audit again for them, their own companies which they have audited. So nowadays, all the auditors which they come, they spend a lot of time in collecting all the evidences and makes a complete file, so that when they are subject to audit by the audit board, which is managed by the Institute of Chartered Accountants, some body, so that they come and the auditor has done a good job, whether he has gone and seen everything or not. So, that all the expenses which are paid to the auditors as a fees goes into the profit loss account. Is it okay now? समझ आ गया? Because I teach audit also to undergrads. I mean, for this year there were no BCom students, so I had taught. But it is my, the main subject, chartered accountant. So the audit is one of the main functions of the auditors. Okay. Now, salesmen, salaries, and commissions. So you have some salesmen who are selling your products. Either they can be your own employees, or they can be your channel partners, or wholesalers, or distributors, and you're paying some commission to them. Okay. Or you're paying salaries to your own people, your sales staff. So that will go to the profit loss account. It's an indirect expense. Commission to the agents, like I said, the channel partners. The advertisement, it can be newspaper, it can be radio, it can be TV, it can be anything outdoors. Okay. Warehousing expenses, you are keeping some goods in the warehouse. Okay. Then packing expenses. Okay, all the goods which are packed before they are sold, so packing expenses will also be here on the debit side. Then freight and carriage on sales, like carriage outwards you're talking about. So any freight and carriage which are incurred on the sales will go to the profit loss account. It will not go to the trading account. Okay, that's a norm.
Sir, like creative carriage in outward, when we are selling the
When
package,
we are selling the goods.
that will be indirect. So like they should like create a carriage outwards. Like I'm just asking.
No, it's written freight and carriage on sales. So it means outwards.
Okay.
So outward is a word which is used in the textbooks. Okay, just to make the student understand what is this. Otherwise, in real life, we say freight and carriage. Okay, when we say that and we show in a profit loss account, that means it is on sales. Okay.
Like when we are doing the accounts purchase, so we like create inwards. So
Yeah.
there is inwards.
Inward means that we are.
There has been no expenses from our side.
Ah.
But when we create outwards, so we have some expenses. So that is how.
So even carriage inward is also an expense which we have done. Okay, and carriage outward is also an expense which we have done. Inwards will reflect on the purchases which we have made. So we have bought goods for selling them, or we have bought raw material for converting them into
Yes, sir. Both they come in the direct and indirect
a
expenses.
direct expense. So carriage inward will be a direct expense, and carriage out will be indirect expense.
So freight is also direct or indirect expenses.
Freight is basically if you are paying on purchases, then it will be direct expense on the goods. Okay, fine.
I am going from those questions like
Sure.
trading around.
Yeah. Okay. Export duties. Sometimes, of course, we have to pay duties on imports. Fine. Whenever we import goods from abroad, we have to pay import duty. Okay. And whenever we are exporting also goods, sometimes we have to pay export duty because the government doesn't want these goods to be exported, so they levy some kind of export duty. But it is very, very on a very, very limited kind of products. Maybe long back we found when somebody was exporting leather, so he had to pay a 5% duty on that. Okay, but normally export duty is not there. It is on a very, very limited one or two kind of goods. We need to check the tariff. Okay, but import duty is basically paid on imported goods. Okay, whenever we are importing goods from outside, it carries an import duty. Okay, now long back, import duties were running about 200% when you used to protect our industry. So government, they were trying to protect the Indian industry from outside competition. So we used to have import duties to the tune of 200%, 300%. So we couldn't import anything from outside because if we import from outside, it becomes very, very costly after paying the duty. Okay, but after the liberalization happened in India in 1991, so there is a body called World Trade Organization, where which puts a lot of conditions to all the governments, and they want that there should be free trade among the countries. So they don't want countries to put a very huge amount of duty. Okay, so so then on the so WTO, our finance minister, he accepted the WTO's conditions that will bring down the duty from say 250% to around 20%. So now the duties have become very close to 15 to 20% on all the imported goods which we have. Duties are taxes. It is basically to protect. Basically, duties are basically a source of revenue for the government. Okay, so because government needs money, so they levy, income tax, GST, custom duty. Okay, so all these are basically a source of income for the government. But government has been using, particularly the import duties, basically to bring, to basically provide some protection to the Indian industry. Because at the time when started India became independent, so we were still developing our own products. Okay, and our industry was not grown so much. And long back, if you remember that we had only, if you remember of cars, so India was not manufacturing any cars. Ambassador and Fiat we had. Okay, so nobody could import goods from cars from outside because they were very costly, and they could Indian manufacturers could sell their product at at any price because they knew that there was no other alternative.
Any price and any quality with zero innovation.
Absolutely, absolutely. Quality wise,
That part didn't change a bit. Only they were problem was the metallic body and sofa like
yeah,
that.
absolutely. Even everything was so bad. I remember my father purchased a car when I was very young. So we went to somewhere in Amritsar, one of the relatives, and the roads were pathetic. And during the entire journey of about 300 kilometers, the car had punctured about 12 to 15 times in between. 10 to 15 times there were punctures which happened. So it took almost whole day, whole night to reach to that place, Amritsar. Now it takes only 4 or 5 hours to reach to Amritsar. So by road. And I remember, we were, the first time we went to Jaipur on our own car. And in Dharuheda, the car broke down, Ambassador. And then it was towed by a truck. So we went up to the Jaipur with it.
Politicians don't do that now.
Huh?
Even politicians, they don't do that.
Yeah.
They,
So, yeah,
they
fine.
do like Prime Minister is sending make that most please neighbor.
Yeah. So GST, to the extent it cannot be recovered from the customers. Now, there is something called goods and services tax, okay, which is required to be paid. Okay. Now, goods and services tax is basically a pass-through. It's a pass-through. Okay. I think it's all covered. So basically, I'll write here GST. What's the full form of GST? Yeah, it was introduced just few years back. Yeah, about 5 or 6 years back, I believe, not more than that. Okay.
But the people are struggling with this. Like some other state governments and the tax a bit too complicated for some businessmen. Like they do complain.
Of course, because what happens is that earlier we used to have like we used to have excise, we used to have sales tax, we used to have octroi, so many taxes. Now everything has been made into one, which is called goods and services tax. Okay. Now we were one of the last country in the world to bring GST in India. Whereas, all the countries, even the smaller countries, the first country to bring was, I think, Germany, which happened in 1960. Okay, they brought this goods and services tax, or the VAT, whatever they used to call it back then in that time. So they brought way back in 1960. And we have been struggling to bring the goods and services tax in India. And the problem with the earlier regime was that we used to have so many statutes and so many authorities which are dealing with that. I remember when I was I was working in a company called Grasim in a place called Madhya Pradesh, or I was in Indore and Gwalior. So we used to deal with excise authorities, and they would be there will be a lot of surveillance of those people into our interference in our business. And they used to come and inspect our goods every now and then. And and they used to tell very openly that they need money for as we should pay some money under the table so that they can allow us to carry on the business in comfort. So I remember we used to pay a monthly kind of a charge to the range superintendent, who is the head of the local excise body there. So there's a lot of corruption, and there was a cascading impact of tax on tax, which was making the products very, very costlier in India. Okay, so with the introduction of GST, which is one tax, which is been now earlier, all the state governments they had their power to collect the taxes at their own end. The sales tax was collected by the state governments. There were almost say 20 or 30 governments which are there in India, which had a power to tax people. So that all that power has been taken away from them, and it has been now brought into the central regime. So there was a lot of kind of a hue and cry with the states, because the states would be losing the money. Now they will be dependent on central government. Okay, so we have.
They can't complain that you haven't negotiated GST.
Yeah. So, because to make the law which is acceptable to the state governments, so that they don't lose all the powers at the same time. So that's why the law has become little bit cumbersome and little bit complicated, what he's telling, which makes, the life of the normal businessman little bit uncomfortable. Because the state governments never wanted to lose their power. So they tried their best that the GST is not implemented in India. Okay. But everybody knew that this is the best course of, taxation, which all other countries in the world have followed. Which it used to take almost like 15 days from for the goods to move from, say, Kanyakumari to, say, New Delhi. Suppose somebody is transporting. Now the time has been reduced to only half, because every time it is passing through one state to another. So there will be state taxing authorities which will come and check the product and see whether the person has paid the tax or not. The levy which is applicable, the entry tax and the octroi, and so many things were there. So it was, creating a lot of struggle for the business people. They had to pay a lot of money under the table. A lot of litigation was happening. So, I remember we had almost like 30 to 40 crores of cases, which I was, handling for my company in Gwalior for sales tax, excise duties, and all those taxes which are now gone and got, merged into one tax. So there was a lot of problems which were being faced by the business people. But compared to that problem which the business were facing now is far less. But we always have a this thing that we always crib. If we are told that businessmen feel that this law is going to bring a lot of comfort to the business, but they feel still that comfort is missing, because the law is still a bit complicated, because the state governments they have their own share and they have not fully lost their power, and there are some products which are still chargeable to excise duty, which has been abolished now in India, but still on few products. What are those products where still the state governments has the power to charge money? Tax. Liquor and petrol and diesel. Diesel and petrol, they are the biggest revenue earners for the state. Almost like 30 to 40% of the income that they are getting from taxing the business people and the common people were coming from these two sources. So they said, okay, you can take away all the powers to tax all other things, but not the petrol and diesel, which still remains in the hands of the state. And there's a lot of hue and cry whenever the petrol prices go up, like they are going now. So they say that it should be brought under the GST ambit, so that it becomes a lower burden on the people. Fine. So anyway, so GST, to the extent it cannot be recovered from the customer. So now this is very important. You must know that as a lawyers. Whatever GST which is paid by any business authority, it becomes just a pass-through from. It is not an expense. So GST is not an expense for majority of the business people. So GST is is not an expense. It is an expense only for the final customer. This is passed on from one businessman to another businessman. Finally, it is passed on to the final customer. Okay? So the person who bears the taxation is only the final customer. If the GST is implemented in its right spirit, so that should be the case. But still, in India, there are certain cases where we are not following this norm. For example, let's talk about, a restaurant in India. How much GST you pay on a restaurant bill? 5%. When we started, the GST was implemented, it was 18%. And within a month or two, the government had to take it back and bring it back to 5%. Because, there was a lot of political pressure. Because political parties and everybody was, trying to make a, thing big that, the food is becoming costlier, the restaurants become costlier. So it is going to hurt the common man. So now it was 18%, okay? Fine. So 18%, which was levied to the customers. Now, if 18% is levied to the customers, so whatever input the restaurant is using and whatever GST they are paying on the inputs, they used to get 100%, adjusted against this 18%. Right? Right. Suppose, if a restaurant is paying rupees 100 GST on whatever raw material it is using for making its final product, that is the food. Okay? So if suppose the customer has to pay 100 rupees on the final, say, good or the food, so the restaurant will not pay any tax. So that all 100 rupees which they paid will be passed on to the customer by levying of 18% tax. Okay, fine. So this is the case. But then the government said, okay, we are going to bring it to 5%. Fine. But no input credit will be allowed. That means whatever 100 rupees you are paying will become your cost. Whatever raw material on GST you are paying the raw material, that will become your cost. So only to the tune of say 20 bucks which you are paying actually charging to the customer will be allowed. So that means the 80 rupees will become now your cost for making your food. Okay? So they will increase the rate of the menu card. So when we buy the goods, we will think that we are paying only 5% GST. But the cost of the taxes which the restaurant has paid, that money is getting built into as a cost of its final product. And we are paying it, isn't it? अगर उसकी cost what government did was, they said, okay, if that is the case, they are going to reduce the GST on the food what we are buying from the restaurant from 18 to 5%. But that means whatever GST you are paying on the raw material what you are buying will not be allowed to you to be claimed as a set-off against the final tax which you are paying to the government, which is being charged to the customer. So customers say, 100 rupees collect karte the, okay, and they used to pay, 100 rupees on their raw material. So that means they don't have to pay anything by themselves. So entire 100 rupees was going to the customer along with the bill. So customer was bearing it. You got it? Okay. Now what is happening is, suppose they are paying 100 rupees, but they are charging only 5% GST. Suppose they are charging only 20 rupees. So if they are charging 20 rupees to the customer, so 100 rupees they are paid, so 20 rupees they are charging. So that means 80 becomes their cost. Okay. And they will not deposit any money with the government because they have already paid 100 rupees on their raw material, isn't it? So this 20 rupees is already by the person who is actually from where they have bought their raw material. He has paid. Right? So with the result, this 80 becomes your cost for a restaurant, if that is the case. Now, GST to the extent it cannot be recovered from the customers. So that will become your cost. If entire GST is not allowed as an input credit, technically we say it is not allowed as an input credit, then it will become a cost to the company. So this is one such case. Now again, if you are using petrol and diesel, okay, like many companies, they have their, power being made from, say, diesel. They have the DG sets which are running on diesel. So they are paying huge amount of excise duty on the diesel. Okay. Now, the diesel is not, cannot be claimed as a input credit, or if the final product is chargeable to GST, then GST and excise are two separate laws. So you pay excise duty on your buying of your diesel, which cannot be claimed from your GST liability. So that means the excise duty paid on diesel becomes your cost. Okay, got me? Should I repeat that again? Okay, so that means that diesel, I just repeat it again, that when a companies buy diesel or petrol, which is not chargeable to GST, okay, there is no GST on diesel and petrol. And whenever we buy diesel and petrol, if I am a manufacturer and I'm using diesel, which is going into my final product in some form or other, either as a, a power or whatever form it is going, I'm using fuel and power where, I'm buying diesel and say furnace oil or any product which is not chargeable to GST. It is subject to say excise duty. So all that excise duty what I pay, which goes in the hands of the state government as their revenue, so that cost will become my cost, 100%. I can't claim that against my GST liability, which I charge to my customers on the finally GST when I raise bills on them. Okay, so I can set off an entire raw material GST paid on my any product which I have used. So since diesel is out of the chain, so that becomes the cost of the this thing. So that's why there is a hue and cry that if the GST becomes, if there is a GST which is levied on the diesel, then all these companies who are using diesel, they can claim and take a set off against their goods when they're selling to the final customer, which is subject to GST. So they can claim this as a credit. So it becomes a pass through from them. It is not becoming a pass through. It stops there and becomes a cost. Is it okay? So GST, to the extent it cannot be recovered from the customers, is basically a cost, and it will go to your profit loss account. GST, which is fully, input available for input credit, will never become your cost because it will become the cost of your customer, isn't it? Is it clear? समझ में आया? नहीं आया? So easily. It's not your problem. It's the complication of law which makes things sometimes difficult. And that's why even the profession of law and profession of chartered accountant exist in India, and they do well because of this. Because we can understand as a lawyer or a chartered accountant or experts, as you will, maybe one of your semester studying about GST, I don't know whether it's there or not, but you will be telling me all the laws and studies. It should be there. So, because I have been teaching GST, when it was introduced in India, so I want to do all the things. We have been going to various industries, various companies to tell them what is GST and what they are supposed to do, so that they become GST ready. So we do a lot of seminars in India where this whole law was explained to them before it even came. It was about to come in a year's time. So, and I think in Mandal University, I just talked to the undergrad students about 4 or 5 years back in the GST. Okay. So GST, to the extent it is, cannot be recovered from the customers. Okay. Huh? Yeah, definitely. So okay. So that's the thing. Kya hua? So GST, which is where the input credit is not available, what will happen to it? It will go to profit loss account, or it is a pass through for a company. Answer me. It will be a pass through, or it will become a cost for the company, where the company cannot, take a set off of whatever GST it has paid on the raw material, because either the final product is exempt or the final product has a lower GST. No. It will go to profit loss account as cost and not pass through. Pass through tab hoga jab there is a perfect relationship. Okay, like I'll just tell you an example of my own society. I'm staying in Gurgaon, so we have about 1,300 houses there, and they are provided services like we provide guards to them. We have our welfare society, so there's a service of guard. There are about 200 guards in our locality, which are doing 24 hours kind of guarding that place. Then we have the horticulture. So we have about 6-7 parks there, big parks, which have to be maintained by the association. So we employ gardeners. We have a helpline where if suppose there is any problem in the house with regard to plumbing, electricity, or anything, so we just make a call and the person comes immediately and rectifies that. So a lot of services are provided to all the houses. The roads are kept clean, broomed, everything spick and span. So for doing all this, some cost has to be incurred. Like in big societies, we have lifts also that needs to be maintained. But we have DG sets, huge DG sets, about 10, 12 DG sets, where the power, at the time when the power is not there, there's 100% power. Even you can run your air conditioners, everything on the DG sets. So we buy diesel also. So all these accounts are being maintained by, I'm deeply involved in that because I'm part of that. So I look into the accounts also. So we pay a lot of, GST on, we have hired a contractor who provides us the service of guards, plumbers, electricians, gardeners. So he raises a monthly bill of about, close to about 60 lakh rupees per month. And he levies 18% GST on that. It's a huge amount, about say 10 to 12 lakhs of GST is paid on inputs what we are using. Okay. Now, uh, when we are raising the GST bill to our residents, so there is a law in India. If the charges which we are levying, it's called the CAM charges, which is called the maintenance charges, okay, which we charge to all our residents because we are at one end paying all this money and we need to recover it from our residents, okay. So now the residents who are billed at a lower than 7,500 rupees per month, they are exempt from GST. So anybody whose charges are below 7,500 per month, their maintenance charges, there is no GST on them. Okay. But there are some houses which are very huge houses, say about 500 or 600 square yards. So they always cross a threshold of 7,500. Almost like 5% of the houses, they are charged to GST. 95% people are not charged any GST. So whatever we have paid GST as about 10 lakhs or 12 lakhs on our inputs, we are not, we can't claim that. We can claim only say 97, 98% of the, sorry, only 2 or 3% of the GST. Okay, because only our 97% of income is not subject to any GST. 97% of the income which the association is collecting by charging the money to the residents, they are not subject to GST because residents don't have to pay GST. So whatever we have paid as GST for managing the association, or providing all the services, so it becomes cost to us. It doesn't become a pass through. Fine. If suppose everybody were paying a GST, then we would have claimed it, and entire GST could have been passed on to the residents. Even their expense would have been lower in that case because here everything is going into cost. Fine. So we worked out that if we are allowed to tax everyone under GST, the monthly maintenance charges will go down drastically. But that's not happening because it becomes a cost to us. Is it clear? Okay. Okay. पढ़िए लास्ट वाला.
Maintenance of vehicles for distribution of goods and their running expenses.
So maintenance of vehicles for distribution of goods and their running expenses. Suppose you are having some vehicles, some lorries, some trucks, okay. So which you are using it for basically for carrying the goods outside, okay. Like you are making products and selling them. So you are using some vehicles. So this will be a indirect expense. This is a selling expense for the company. Okay. आगे.
Insurance of finished goods in inventory and goods in transit.
So insurance of finished goods in inventory and goods in transit. So there's always a chance there's a fire. Okay, if there's a fire, then what happens is that your goods may get destroyed. Okay, so whatever you manufacture, so you have to take an insurance from the insurance company. So whatever insurance premium you're paying, it becomes an expense for the company. It goes to the profit loss account. And again, when you're importing goods from outside or you're getting goods from outside, say from the place where you're working, so it's coming by a truck or a listing or a train. So the chances that it can be lost in transit either by a fire or pilferage or whatever. So you insure those things. Okay, fine. I was just looking at it. Okay. So the insurance companies, generally they give some discounts whenever you're going to take a huge, like in one of the companies where we are paying about 1 crore rupees insurance per annum for covering our all insurances for our for our inventory, for our building, our machines, whatever we have put them. So we are paying about 1 crore rupees as insurance per annum to the insurance company. Okay, just listen, then you can just raise it. So the insurance company says, okay, we can lower this premium if you have adopted certain measures. Okay, like suppose you have put some, fire sprinklers in your house. So there is some kind of a sprinklers which are put. I can't see some ducting here. So if there is a fire in this room automatically the water will start coming. There will be bulb which gets, because of the smoke, it gets, blasted, and the water will start coming in this room. So it will extinguish the fire immediately. Okay, so that's a protection mode, and this is called fire hydrant system. Fire hydrant system. Big pipes are there, and some red kind of equipment is there, and it runs all through your premises in university also. So in case of a fire, so instead of calling a fire brigade, so we can just activate that, and it can, be help in, bringing down the fire. So if you have put all those kinds of measures in place, then insurance company says that we'll give you 25% discount on the insurance premium. If you haven't done, pay 1 crore, otherwise pay 75 lakhs. Or if you have, fire doors, some of the doors, if you've seen, they're very bulky. Okay, so these are called fire doors. Okay, so that if the fire happens, it will not go past that place. Okay, because it's a fire door, it will protect the other part of the building. So if you have put those things which are as per the norms of the insurance companies, then it will basically reduce your insurance premium. Yeah.
I know in architecture class, I know
Huh.
the fire doors will be from this side.
Huh.
Because when people, when the crowd is graduating, these fire doors will be from this side, not from that.
Yeah.
From,
Yeah, maybe.
not from the side of the fire.
Sure.
It's that side.
So it is basically to help that the fire doesn't spread. Okay. And if you have, certain goods which are, prone to fire, okay, so you put them, on the other side of the building, and the east side building may aapka fire door hai, so that, the fire will not, immediately go to that area, and it will, bring a lot of destruction to the company. Okay. So you have to plan, put your goods in such a manner, and if you've done your planning well, and you put all those equipments which are, as per the insurance company, so they will bring down the insurance cost. Okay. Now, I remember, one time, there's a place called Nagda. Have you heard of that in Madhya Pradesh? Near Indore. You have heard of Indore? So, Indore ke paas ek jagah hai Nagda, which is, near Mahakal, that is big temple there, Ujjain. Yeah. So, I was working in Grasim, and one of our main office was in Nagda. Nagda is the big plant of, Birlas, which is manufacturing viscose fabric, which is the world largest plant in the world. And so we had an annual meeting there. Not annual meeting, but a meeting was organized there, and it was a conference on insurance, where all companies, all Birla companies, executives who are handling insurance for their businesses, they all assembled, because all Birla was paying almost like 100 crores insurance premium to the insurance companies. 100 crores, which is not even, sometimes it is a turnover of a company. So they are paying 100 crores of insurance. So the conference was basically, it was a regular feature. They used to, attend that meeting. So in that meeting, the theme was to bring down the cost of the insurance, say by 20 to 25%. So we all, gathered there and applied their minds, how we can bring down the cost of the insurance which the company is paying, which is 100 crores. But one thing I just remember was that all the boundary walls, they are also insured along with our building equipment. Just the boundary wall ko to kuch hota hi nahi hai. So remove boundary wall, don't get it insured, because the boundary walls will never get destroyed if there is a fire. So by that removing boundary wall, we saved about 50 lakh rupees of premium for the entire Birla companies. Okay. Okay. Yeah.
Suppose there's a hotel and that hotel purchases around 20 cars.
20 cars.
20 cars. So do they insure all 20 cars? Like how, let's suppose getting insurance of 20 cars is so much. So how do they balance that out? Like how I understand that?
No, actually, you see, insurance is not, they have to insure all the 20 cars, unless they are taking the risk. After whose money is, they are, put the shareholders' money. Okay, so they are ultimately answerable to the shareholders. So they say that we have only insured 50 cars, say 10 cars out of 20 cars, and if there is a loss of, something for the car, then they have to bear it. So how they are going to explain to the shareholders? The shareholders would like that. If you have a car, you will take insurance or not? अगर आपकी अपनी कार है अपने घर में, उसकी इंश्योरेंस करवाओ या नहीं कराओगे? उसका 20,000 भी प्रीमियम है, 30,000 भी है, you get it. Because the chances that say next 3 years nothing going to happen to your car. Okay, there will be a chance that you never claim any money from the insurance company, but you will still, as the time comes, your father would be a गाड़ी की insurance करना बहुत जरूरी है. अगर miss हो गई है, तो immediately he will do it. We are all tuned to pay insurance premium, but we are not tuned to any loss which happens because of if there is some problem with our asset. Isn't it? अब जैसे आप मेडिकल इंश्योरेंस लेते हो, Okay, everybody is covered in the medical. Suppose anything happen, hospital, everything. So we are medically insured. So how many times we use that cover? Very less. We use it at times, but it's not like everybody is using the insurance cover. But we do it for protecting ourselves. Fine. Suppose something happens and I have not taken insurance for the family, so everybody will look at me, my wife, my children, insurance क्यों नहीं कराई? So I'm answerable. As the shareholders are answerable. I mean, they have to they seek answers from the management why they have not got their things insured. Okay, fine. So now we come to the bad debts. Okay, what are bad debts? Bad debts is sometimes the customer don't pay money. Yeah. One place to another. So if the goods are coming, like suppose you have imported some goods from Germany, they are moving from ship to your place in Bombay and then moving to your place of business. So you need to get it insured if anything happens to the ship. Okay, so that's called the marine insurance. Okay, so that insurance you need to do, and that is an indirect expense which goes to your profit loss account. Huh? It happens. Yeah, sure. Huh. Yeah, so that's why such kind of thing happens. Yeah. Sometimes, the person who is sending the goods he insures on your behalf, he charges something called CIF, which is cost, insurance, and freight. Sometimes it's free on board, FOB. So it depends on what kind of contract you're having with your supplier. If he says FOB, my cost is $1 lakh. So that means he's not taking any, he's saying you pick up the goods from my place in Germany, it is costing you $1 lakh. But if you want them at your Bombay port, then it will cost you $1,10,000, which includes your insurance as well as your freight. Okay. So if it is a CIF contract, that means it will include everything, cost, insurance, and freight. And if it is just FOB, that means how much it costs you at the doorstep of your supplier. Okay. So bad debts. Now, bad debts are basically the money which sometimes the customers don't pay. Okay. Particularly taking example of the telephone companies which have been working. So we have been raising bills like prepaid. There are two kinds of customers: prepaid customers and postpaid customers. Nowadays, 99% customers are prepaid, where the customer has to pay upfront and then use the phone. His balance gets reduced. Most of it. How many people are having postpaid here? Any student is having postpaid? You, you, even me. So if you take a poll, there are only three people out of what are present here. So almost about 90%, or one time it was just 50% of people who were having postpaid, or rather 80% people are having postpaid and 20 prepaid. But now the things have reversed. Okay, and reversed in such a order that 90% are prepaid and 10% postpaid. Now, postpaid is when you pay it after a month. Okay, bill आएगा तब pay करोगे. Now, we give that luxury to the customers to pay it after a month. Okay, or even your broadband or whatever you're paying after a month. Now, sometimes the customer doesn't pay. Either he leaves the place, okay, without paying the last bill. He has shifted to some other place. It's very common. Or sometimes the customer complains that he was not able to make any calls. Sometimes the speed was so poor, and he switches over from say Vodafone to Airtel to say Reliance, and he doesn't pay the last bill. So it happens in telecom and any other companies also where your customer is not paying money, okay, and the money becomes dead. Fine. So that is called the bad debt. And it's an expense which goes to the profit loss account. Okay, fine. Of course, there is a little bit complicated treatment which happens in bad debt, which we'll discuss later, which confused me every time when I was a student. But now since we have seen it in industry and it's there, but this will always confuse you as an account if you're doing your accounts course. Basically, as a lawyer, you should not be bothered about it. But bad debts provisioning is a little bit a complicated way of handling it. So we'll discuss that as when it comes. We'll do a question there, okay, to explain that how the bad debts are treated. But that bad debts are expense. Once you have treated them as bad debt, it goes to your profit loss account as an expense. Okay. So this is bad debts. Can you read, Aravind?
When a customer does not pay the amount due from them and all the hopes of recovering the amount are lost, it is said to be a bad debt. It is a loss to the stock. Therefore, bad debt account is debited. It is later written on a profit and loss account on the debit side. There is no use showing the amount due still as an asset. The account of the customer concerned is disclosed by being credited.
Okay. Okay, just hold. So basically, you have a bad debt is basically an expense. Okay. So it goes to your profit loss account as an expense. But the second impact will be happening to your customer account. If you have to record something to the customer, it will become bad. So you remove your customer account also from your books. So that means bad debt account will be debited and your customer account will be credited. So that your customer balance reduces and your that bad debt becomes a nominal account, it goes to your expense and profit loss account. Is that right? हाँ अब ब्रेक लेते हैं इसके बाद जो है वी विल डू अ क्वेश्चन ओके आफ्टर द ब्रेक फाइन सो इट्स 10:08 so what time 10:20 10:20 10:25 in between okay? Fine somewhere so 20 minutes break okay fine to put it more specific